Have you ever wondered how the stock market actually works? In the next 3 minutes, we'll break it down. The stock market might seem complex, but at its core, it's a place where ownership of companies is bought and sold. When you buy a share of stock, you are purchasing a tiny piece of that company. Companies issue stock to raise capital, which they use to grow their operations, build factories, or develop new products. Investors buy these shares, hoping the company will succeed and grow in value over time. Stock exchanges are the organized facilities where these shares are traded, ensuring a fair and transparent process. Investors place orders through brokers to buy or sell shares based on their expectations of future company performance. But how do we determine what a stock is worth? This is where the concept of market value comes in. Stock prices are constantly moving, reflecting what the market is willing to pay at any given moment. Prices are driven by supply and demand, which in turn are heavily influenced by company earnings and economic news. To track market health, we look at indices, which represent the collective performance of groups of stocks. An index like the S&P 500 gives us a snapshot of how a specific section of the market is trending. Diversification is the strategy of spreading investments across many different companies to reduce risk. Investing is about balancing potential rewards with the risks inherent in the market. Every investment carries some degree of risk, which is why it's crucial to understand your goals before starting. Always conduct thorough research before investing. Knowledge is your best asset in the stock market.